Hello, everyone, and welcome back to De-Risk Investing. Usually, we are here diving deep into global macro trends and stock analysis. But today, we are kicking off something new, and I'm really excited about it. Welcome to the first episode of De-Risk Investing Concepts, our new series designed for the future investor. If you're a pro listening to this, great. But this series isn't really for you. It's for you to hit forward and send to your daughter in college, your friend who just opened their first brokerage account, or anyone who wants to understand what you actually do all day. Now, if you follow our channel, you might have seen a quick 60-second short we did some time back on what is a stock. And while that was fun, 60 seconds just isn't enough time to really appreciate such a critical concept. So we decided to do it properly. So let's get into it. One of the fundamental building blocks of our entire industry, the stock. To understand this, we have to ignore the Bloomberg terminals and the flashing tickers for a moment. We need to look at a lemonade stand. Imagine I start a lemonade business. It is a huge hit. The recipe is perfect. I want to build a stand on every corner of the city, but I'm out of cash. I have two choices to fund my expansion. Choice one, I go to the bank. I get a loan. This is called debt. The bank gives me money, but they demand I pay it back with interest every single month. It doesn't matter if I rains and I sell zero lemonade, I still owe the bank. That is pressure. Choice two, I come to you. I say, I need $1,000. I won't pay you interest. I might never pay you back, but you now own 10% of my company. That is a stock. It is not a loan. It is equity. You are now my partner. If my lemonade empire becomes the next global giant, your 10% is worth millions. If I accidentally use salt instead of sugar and the business fails, your 10% is worth zero. That is the trade-off. You are taking on risk to share in the reward. Now, a little bit of history that I love. You might think the stock market was invented on Wall Street. It wasn't. If we want to get technical, the Romans and Swedes had basic versions of shares way back in the day, but those were clumsy. You couldn't easily buy or sell them. The earliest recognized joint stock company in modern times was the English, later British East India Company. It was granted an English royal charter by Elizabeth I in December 1600, with the intention of favoring trade privileges in India. The real game changer happened in the year 1602 with the Dutch. Back then, the big business was shipping spices and silk. But just like my lemonade stand has risks, sending a wooden ship around the world was incredibly dangerous. Pirates, storms, disease. No single person could afford to take that risk alone. If you paid for the ship yourself and it sank, you were bankrupt. So the Dutch came up with a brilliant solution. They said, what if 1,000 people chip in a tiny amount of money to buy a fleet of ships? They gave you a piece of paper proving you owned a fraction of the fleet. If one ship sank, no big deal. The other 9 came back and everyone made money. So when you buy a share of a company today, whether it's Apple or Tesla or Disney, you're doing the exact same thing. You're chipping in to fund their fleet. Now, before we wrap up this concept, I need to make one important clarification. Owning a stock gives you a right to the potential profits and a vote on how the company is run, but it does not mean you own the physical assets. I always say, if you buy a share of McDonald's, you are technically an owner. But please, do not walk behind the counter and start frying your own nuggets because you own the place. Security will ask you to leave. So that is the foundation. Stocks are simply a way for companies to build big things and a way for you to participate in their success. To my regular listeners, I hope this serves as a great tool for the future investors in your life. If you want to see these concepts in action, check out the Stock Deep Dive on Carvana and our Global Markets Brief, which we dropped earlier today. That's it for this episode of Investing Concepts. Thanks for listening. This is De-Risk. Happy investing.